Did the stock market crash of 2020 find its bottom? Or is this just a bull trap? It's a bunch of bull trap. Or an impulse wave or a dead cat bounce. This is a trader's point of view. Let's get into it. What's up, everybody? I'm Michael Silva, and you are watching Figuring Out Money. In today's episode, we will be discussing the stock market crash of 2020. I will be going over what it is that I'm doing with my money and what you could be doing with yours. Now, before we get into this, I am not a professional investment advisor. Don't take advice from me. I'm wrong all the time, so yeah. In just a few moments, we'll be hopping into my computer and I will show you some charts that I put together to give you maybe a broader perspective of what is actually taking place in this market. I'll be walking through the stages of what is actually taking place and what has taken place and why I believe that we have not reached a bottom of the stock market yet. Actually, I am almost certain we have not reached that bottom. Could I be wrong? Maybe. Could I be right? Maybe. Now, I've heard some people chirp and they said, technical analysis, it doesn't work in these environments. I have to bring this point up. This environment is the most uncertain environment of all. The only thing that we really have to work on and to see from is technical analysis. You got to understand, fundamentals, they're out of the window right now. The Fed just came in and they said that they're going to be doing unlimited quantitative easing. They didn't use those words, but that's what it is. The Trump administration, the president just signed the first stimulus bill of epic proportions, $2 trillion, the largest in history. Jobless claims, they just surpassed 3 million. Look at this chart on jobless claims. It just is ballooned to the moon and it has a lot longer to go. This is some very, very uncertain and scary times. But yet on all this news, the market has seemed to bounce, to find a V-shaped recovery, and the news is coming out saying that this is, a good thing. I'm a little scared, so I want to show you the technicals. I want to show you what it is that I'm looking at and give you a good perspective. There's a lot of people that are excited when the market falls. They say, buy the dip. Buy the dip. The stock market always recovers, this and that and this. I need to open up your mind so you can see into another person's perspective. Can this recover and make new highs? Yes, but I don't want to put all my money into that bet. It just doesn't seem that good. So let's go ahead and hop into my computer and I will show you what I'm looking at. All right, we are here in the computer and we are looking at the Dow Jones Industrial Average chart. Okay, this might look foreign to you, but I'm gonna walk you through what I'm looking at, okay? So back here on this little area right here, this was February 20th, all-time highs, okay? All-time highs. There's a lot of bullish people in the market at this time. I'm sure that they had all their, whenever you see on CNBC where they wear a hat that says Dow 20,000, Dow 25,000. I'm sure that they had them printed and ready, Dow 30,000, okay? But just about that time, we started seeing this pullback from basically 29,000 down to 25,000, let's say, give or take. So during that pullback, what was the sentiment of the market? Okay, it doesn't take much to figure this out. You can just go to any financial YouTube video or any Warren Buffett quote for that matter, and what you'll see is a lot of excitement that stocks are on sale. CNBC, MSNBC, Fox Business. These are, hey, this is a great time to buy because stocks are on sale. That is what the sentiment was in the market. This actually is a Twitter post I did on February 27th saying this stock market in quote sale reminds me of all the red sale signs at the shopping mall. Plain white t-shirts, 90% off. Now only $49.99. That's still expensive. Okay? And this is the scary part. What happened? It bounced. It bounced from a low of 24.7 up to 27,000. Okay? So during that bounce up, you rest assured, how do you think those people felt? They said in their head, they were like, I knew it. It was a bounce. It was the best time to buy. That's why you got to, buy the dips. Don't be scared. Blah, 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 et cetera, et cetera, et cetera. Okay. Well, then what happened? So now you got to understand they were happy to see this. Then they were even more excited because they were right. And then swoosh, shawoosh, moved down tremendously. We're looking at a drop that's just so aggressive. This is a record-breaking, just extremely fast move to the downside into bear market territory. I think the last time we've seen drops like this was in the 2001 tech bubble, the 1987 stock crash or Black Monday, and then 1929 Great Depression. These are crazy moves. Like this is just, we're talking. So it opened here that day, 27,000 at a low of 18,000, 18,000 basically, just right around there. Now, that level, I remember calling out on Instagram. I'll see if I can get a screenshot, but I said the Dow will come into the $18,000 range. And the reason why is because I was looking at this chart. These charts aren't easy or aren't hard to make. It's very simple. And you could just do what's called a Fibonacci retracement, okay? Let me show you. I'll do it right now again. See, if you just click right here, you click the Fibonacci retracement, you click the low, and then you just drag it up to the high, and there you go. Like it ain't complicated. Okay, so yeah, we see this epic proportion drop off. The market goes into bear territory, and then all the excitement happens. People are like, there's people out there that are like, now I'm ready to make a move in, because you got to understand, the last time this happened was in 2008. And what did people do in 2008? Well, they didn't buy stocks, but the people that did, right? The people that did buy at the lows of 2008 made a lot of money on that run up, right? It came all the way up. So what do you think happens when people see that opportunity that they missed out on? Well, what happens is people are going to get really excited about putting their money into a big sell-off, a lot of money, okay? All their money. They want to go all in, but yet they don't know what the bottom is yet. That's the scary piece. So you see a lot of people now very excited that these hit these lows, because now they're looking at it and they're like, this is the opportunity of a lifetime to buy stocks that are on huge discount. Okay. Cool, I get it. But what happened during this time? Okay, you got to understand what is going on in the markets. Well, we just now, United States just surpassed Italy and France as the most cases of the cerveza sickness in the world. Okay, that we are still in very uncertain times with what's going to happen with that. How much longer we'll be in this lockdown? It's hard to say. I'm in California, and it's like, you don't want to leave your house. It's crazy. Okay, so that came into play, but yet we're seeing this bounce. What other news came out? Well, the Federal Reserve, right? It came out and said it's going to print unlimited money. Quantitative easing. Okay, quantitative easing infinity. They're going to buy basically back mortgage-backed securities, bonds. They said they're going to do whatever it takes necessary. They're going to do whatever it takes in order to propel this economy. And I get the reason why. It makes sense, okay? What else? What else came out? Well, President Trump today, just today, right in this area, okay? He came out right at the close of today. He signed the stimulus bill that was passed by the House for the largest in history. That's 2 trillion bazingas, okay? A lot of money. So, yes, we got the stimulus bill. We got the Fed ready to go, trying to create all these new crazy terminologies. It literally came out with, 8 different things they're all acronyms and they're all very complex. let me simplify it for you. They're creating inflation. It's just printing money, but it's a very, very educated way of doing so. It's a very sneaky workaround way. You can go to the Fed's website. I say Fed because it's the Federal Reserve Economic Department or whatever the acronym is. And you can look at the documents. You can read into it, but just know it's let's keep it simple. It's printing money. Okay. So the jobless claims just the other day came out. 3 million jobs filing for unemployment. So we have record-setting job losses right now, and who's to say when that's to stop? I mean, these businesses are closing down. There's no money and no revenue for the most part coming into retail shops. What about the small businesses? This is all real money and real world problems, but yet you're seeing this bounce, okay? This bounce up. This bounce, my opinion is that this bounce is strictly from the economic activity happening that's caused by the Federal Reserve, and the stimulus package. Because why would you see the stock market go up, right? Well, why would the stock market go up when there was record-setting jobless claims? So they have to lay off all these people. They're getting squeezed out. These companies basically the companies were going to fail. Boeing, for example, Boeing could not service its debt. Basically, the majority of these large corporations, because of the Fed, and this problem didn't start now, it started in 2008 when the Federal Reserve came out and lowered interest rates to nothing for the last 10 years. So debt was extremely cheap. Now, when debt is extremely cheap, what does that mean? Well, in simple terms, that means that you can go to your car dealership and you can get a $70,000 car with basically nothing down. And you can just buy the payment and not buy the full amount because debt is cheap. It's easy to maintain. You're like, I can get this payment. Well, corporations did the same thing with the ability to get cheap money to expand their businesses and bring in different streams of revenue. Okay, so this is all to the point of what's going on with this chart. My thought process is this. Now, people say this is it's a bull trap, which there's a million words, there are not a million, but this could be a dead cat bounce, a bull trap, an impulse wave. You can use the Fibonacci retracements or Elliott wave theory. Like, there's so many terms. I like to keep things really simple here. So I came down, I go basically from the low to the high, and then you see these pretty levels. Okay, I'm originally thinking that it was only going to hit this level right here, the 0.618 level. It might retrace to the 50%, but you got to understand, like, what's the risk versus reward? Do you really want to hold in to stocks or buy stocks at these levels right here when it's so undetermined of what's going to take place? Well, my personal opinion, I drew this out prior to this, is I think that we are going to hit up to the 50% retracement level, maybe higher, maybe up this way, maybe we've already reached the high, and we're going to see this fall down to the lower level. Now you got to understand, in 1929, in 87, in 2000, this all happened. These type of drops and these type of bounces happened. Okay, and all those times that it happened on these big move ups, they all tested the lows every single time. Actually, only one time that the low held. I think that was in the 87 market crash. I'd have to check, or you can check, but it tested its low and then moved up from that point. But every other time, it tested and broke through to the lows. So I'm thinking that this time, with all the uncertainty in the economy, with the Fed doing record levels of printing, with all this stimulus, with the uncertainty of the cerveza sickness, it's not going to just test the low. It's going lower. It has to. It just doesn't make sense as to why it would just keep continuing to go and go up higher. Unless the Fed comes out and buys out all the debt. Every single penny that put the deficits at $40+ trillion, hey, not going to happen. Well, I shouldn't say not going to happen, but what would happen, even if the stock market started flying up, okay, with all that inflation, this is what would happen. stagflation would happen. So prices would go get extremely expensive everywhere you go. A pack of strawberries will be $15 to $20. Toilet paper will be, I mean, the store shelves will be packed with toilet paper because no one could afford it. Crazy. Okay. So yeah, stagflation is when unemployment goes way up. And not only unemployment goes way up, you also have jobless claims go way up. So, and then also inflation, you know, the creation of money. It's crazy. It's scary. It's scary times. And yeah, so in short, where can the stock market fall to? Well, the stock market, and what I've been saying is it can come down to the $11,000 to $14,000 range. That's my estimate of where the bottom will actually be. But you'll see this thing kind of bounce up and bounce low. This is what bear markets do. You have these crazy rallies. It's absolutely insane. So that's what I have to say for the chart. I think that it is heading lower. I think it's heading lower. Okay? I think that this is a fugazi. I think this is a fake out. I don't think we're going to see this. Maybe it might move out higher. But that's my take, okay? Like I said, don't take my advice. Don't sell off all your stocks if you're doing this for the long time or whatever, you know. Do your best advice. I can tell you now. Now let's go hop back over to the other side, and I'm going to tell you exactly my plan, what it is that I'm going to be doing and have already done with my money. So let's do that. So, did the stock market crash of 2020 really find its bottom? Well, from a trader's point of view, this was in fact just a bull trap. It's a dead cat bounce. It's just another leg, or what they call an impulse wave to the upside, that's really going to bring in some more peoples and some more buyers. It's going to give false hope into the markets, and then we will see another downturn. Once again, I will say that this is just a trader's point of view. Me specifically, it's my point of view. I know that there's plenty of other people that think otherwise, but there's also plenty of other people that do agree with me on these points. Okay, so what am I doing with my money? Well, let me start with what I'm doing with my 401k, my employee-sponsored account. I still have 6% of every paycheck going into that because they match it at 6%. The current fund that it was in was just in a random target date fund, or a regular target date fund for 2050. I, just the other day, sold that off on the bounce to go into a money market account. I want just treasury notes, just treasury bills. I don't want my money in any stocks at the moment. Now, I found that this was a great opportunity at this bounce because I was down probably close to 25 to 30% in the portfolio, and now I basically converted it at a 20% loss. The reason why I did that is because I don't see too much more upside. I could try to time the top of this bounce, but I just don't want to. So I sold into it before the weekend happens because a lot of crazy things can happen in just a short amount of time, especially with what's going on in the cerveza sickness right now. So that's the first thing that I did. I converted my stock portfolio into a money market account. It is literally just basically cash sitting there waiting to be changed out eventually. Now, you might say I might miss the biggest stock move in all of history, and you know, typically when stocks move, if you miss the 2 greatest days, you can, you know, lose out on all kinds of profits. Well, yes, you can, right? But you can also, the reverse goes to that. So if you get out of it on the hugest couple of down days, you'll also save an incredible amount of money. So I'm just strictly doing it from a trader's point of view. My 401k, it is a retirement account. I'm not too worried about it. It's not like I have hundreds of thousands of dollars in there. I only have $50,000 in that account. It's a Roth 401k, so the taxes have already been paid. But that's what I'm doing with my 401k based off of that chart that I showed you. The next thing that I'm going to be doing and have been doing is buying precious metals, okay? Right here you're looking at a stack of 20 ounces of silver. That is nothing comparative to what I actually own. I have 500 ounces of silver and I have 4 ounces of gold. Now, if you haven't seen that video of me saying do not miss this opportunity when I talk about silver being a huge opportunity, really it's going to be precious metals in general. What happens when the Fed comes out and prints money and creates inflation, these things, precious metals, are what hedge against it. So I truly think that gold can reach easily $5,000 to $10,000, especially with what's going on here in the marketplace. And another indicator that I've been seeing, I'll put it up on the screen. There have already been inventories across the board of precious metals being completely sold out and back ordered for a long time. It's very hard to get these metals into people's hands right now, and it literally sold out overnight, it was like. So I put out that video and the next day, no one could get their hands on this. It's crazy. So what does that mean? The price of silver and gold, it hasn't budged much, but if you notice, gold is pretty much even, if not maybe a little bit higher, just a tad bit lower for the year, while stocks are down 20%. See, some people say that it's not a good hedge or a safe haven. Well, I beg to differ, because it is showing different. That doesn't mean that it can't go lower, but I think ultimately there's going to be a lot of money, including hedge fund money, going into precious metals. The next thing that I'm looking at is opportunities and what I could buy as far as stocks go. Like, what could perform well in these environments? Well, I already believe that precious metals are going to do well. I believe that there's going to be a huge opportunity in the mining sector. So the GDXJ, the GDX. Now, recently, these stocks have been getting hammered down because of the stock market, and I have not put any money into them yet for that point. However, when I believe that gold takes off, I think that the miners are going to shortly after follow, but in a much more aggressive way. I'm also putting long-term option calls on the price on silver, on SLV. I believe that this is an easy way to potentially make decent amount of money. I did already close out a one position on an SLV call, and just in a couple of days time, I made 60 or 58%, I think it was 58% profit on that call. That was like unbelievably quick. And I think that silver, if you haven't watched that video, once again, watch it all the way through because it's important, has a huge opportunity ahead. Okay, so to just kind of round it all out, I switched out my 401k to treasury notes. It's a money market account because I want to protect my principal. I just do not want to be in stocks right now with all this craziness going on. The second thing I did was I started increasing the amount of precious metals I have and still continue to buy more. I'll probably be buying gold up to the point it reaches $2,000. After that point, I may or may not be doing it. I might be just increasing my silver reserves. The last thing that I'll be doing is looking for really good opportunities to invest in silver mining companies, gold mining companies, both small and large cap companies. I might be using something like ticker symbol SGDJ. I might be looking at the GDX and the GDXJ. And I also might be looking at individual silver mining companies. Now keep in mind, mining companies are very risky and they move very quickly, okay? Their market caps are not the largest, so you need to be careful doing that kind of stuff. All right, so that's all I have for you today. I know I ramble and go on tangents, but the reality is that's just who I am. That is me. I figured like, hey, I could blog, you know, and write this out all perfectly, but the reality is then I would just be blogging. I wouldn't be making these videos and vlogging. So I hope you understand that. If you have any questions, you can leave those in the comments section below. I'll leave with another disclaimer. You know, I'm wrong all the time. You know, don't trust what I say. I'm just trying to make the best out of this situation. And I believe that now is going to be the largest wealth transfer in history. Wealth is never destroyed. It is simply just transferred. And I believe that I want to be on the winning side of this trade. And that's why I'm taking these aggressive moves now. Have a good day.